What it do? Hope you guys are having an amazing day, amazing weekend. It is a beautiful Saturday morning for me right now, and just a great time to make a video and go and enjoy my day after. But stop right there. Let's get right into it. Have you ever wondered or been confused on how to find your daily bias for the market open for your session? Well, look no further, my friend, because I'm here to give you the three confluences I use every single market open every single morning. And what are those confluences that you use, Landon? Well, let's find out. Number one, high high time frame trends. All right, what are high time frame trends? I'm going to tell you. I'm going to draw it out and then show you on a back test. But before I can even talk about identifying the trend, you kind of have to understand what a high and low is. So I'm going to make it super quick and simple. Maybe I should make a whole liquidity video later, but I'm going to show a drawn example of a downtrend, look something like that, and a drawn example of an uptrend, something like that. So these are your highs. So these are your highs right here. Okay, and this applies to both trends. And these are your lows on these. All right, so now that I've gotten that out of the way, let's head over to the actual chart and find a real example. We are on the 4-hour time frame because it is the strongest high time frame, obviously outside of the daily, but this is the one that we're going to be using to really determine our bias every single morning. So our lows and highs come from a down candle and an up candle, but they have to be in a specific order. For it to be a low, you need a bearish candle followed by a bullish candle. You cannot have a bullish candle and then a bearish candle. This is a silly mistake that I've been making for a while. But I just recently learned that a bearish comes before a bullish to make it a low. Vice versa. For an uptrend and you're looking for highs, bullish candle, then bearish candle. Like so, right here. These two, let's zoom into you. So, as you can see, I'm actually going to draw. I think it's a lot simpler to draw. Boop. So, this is our low because red candle, green candle, in simplest terms. Now, how do you know that's the low? Well, the wick goes lower. Had the green candle, come lower. Let's click that. Boop. So, had the green candle come lower, like that, that would have been our low, right? For example, let's see if I can get one right there. That's a perfect way. Red candle, green candle, bearish candle, bullish candle. This is lower, so that's our low. Okay. Now, let's find an example of a high right there. Bullish candle, bearish candle. The wick is taller on the bullish, so it's higher. Another good example of vice versa. Bullish candle, bearish candle. Since the bearish wick is taller, that's our high. But keep in mind, it's very simple. Downtrend, or I'm sorry, looking for a low, red candle first, bearish candle first. Looking for a high, green candle, bullish candle. Whatever your mind works with, right? I'm just trying to make it simple. All right. So when you're finding your bias, you look for the trend. When you're looking for an uptrend, you're looking at the lower lows and the lower highs, but the lower lows are easier to track. Like so. We have a low here. We have another low made here. We have another low made here. So you see it's a consistent up. Obviously, this one made a lower low, but market be marketing. But you get the gist. So on the 4-hour time frame, this is the first one you want to check every morning for your bias. Say, I don't know, this is right before 9:30. We're obviously in a bullish trend right here. Just moving up because we have consistent higher highs and higher lows, right? It makes sense. Same for a bearish trend. I can find one right here. Lower highs, like I said, it's kind of swapped. When you're looking for a downtrend, you're looking for the highs because the highs are what's going to determine when the market breaks structure. Like this. So this is our most, in this example, this is our most recent high. And when the market closed above it with this candle, now we are in a bullish trend. But that's a whole other subject too. I need to make a video on liquidity and breaker structure, but you get the gist. This is what I do every single morning. Every single morning when I find my structure. Sorry, when I find my bias. I look for the trend. Now, how do you use that? Well, I'm going to tell you. You use that by following the high time frame trends. After I, figure out the 4-hour trend. So for example, I'm going to tell you, we're going in an uptrend right here. We got a high, 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 low, 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 and the low hasn't been formed yet up here, but you get the gist. So I'm going to trade bullish. That my bias is bullish. I'm going to be trying to trade upwards. Let's head to the 1 hour. As you can see, the 1 hour is also in a bullish trend. Sometimes these can be different. What do you do if it's different? Well, before I get to that, let's just make sure you realize hourly isn't just with the 4-hour, right? They're both the same. Low, 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 low. Right, you get it. Making higher lows and higher highs. Well, if they're different, which does happen, it's kind of an undecided bias, right? I used to just kind of wing it there, just let market, let it move. And that's actually not a bad idea. It's just to let price develop. Don't rush a trade when you have an undecided bias, when we're in consolidation. Sometimes there's no trend at all, and that is completely your enemy. Consolidation is your enemy. Write that down. You're looking for a smooth trend, up or down, bullish or bearish. Alrighty, where's my text? So that is high time frame trends. Okay, hope that makes a little bit of sense. But you're like, wait, you didn't tell us if they're different. What do you do? I'm gonna tell you right now. You use the other two methods. All right, and I really want to shout this one out because I recently have just been practicing this one. And this is called candle range theory. Theory. What the hell did I spell? Candle range theory. Or better known as CRT. That's what I'll be calling it. CRT. Candle range theory. What is candle range theory? Candle range theory, without sounding like an idiot, I like to use on the daily chart, or just typically just high time frame charts, but daily in the 4-hour probably best for this. Let's see if I can find just like a golden example. I can. Right here. It's a 3 candlestick move. So CRT is a 3 candlestick move. And before, actually no, take that back. We're gonna draw this out. Make it as simple as I can. We're gonna have a bearish candle with wicks. And let's say we have a candle next to it that closes. I'm just gonna do this again. So say we sweep this. Okay, so it's a 3 candlestick move. You use your first 2 candles to gauge your third candle, and your third candle is your bias. Let's see, let's do this. So as you can see, this wick, and this is on a daily candle, remember this. So this is probably a 4-hour high. So we get swept. So we got day 1, day 2. We get swept out right here by this wick, and then we close with inside. I'm going to use this range right here, from wick to wick. So we swept, and then the candle closed with inside the first candle's wicks, which is our range, right? Making sense? And again, I'll just quickly mention, you have to kind of know what a liquidity sweep is for this to make sense, but basically this wick swept out the previous day's wick to the buy side, and typically when we have sweeps, prices go into reverse. So it sweeps, we close bearish. So in theory, that is going to leave our third candle to be a bearish candle. that makes a little bit of sense. So I'm going to break it down. Candle 1 is your range. Candle 2 is your bias decider. It sweeps either side and reverses in the other direction. But before it can reverse in the other direction, it has to close with inside candle 1's range. So we sweep high, close within the range, bearish. For example, I'm going to show you a bullish one. But I'd much rather do this on a back test because it's made much more simple now. Whew. All right, so if we go over here, we have a really, really, really good example of what I'm talking about. What is this? This is candle 1. This is the daily chart. We have candle 1, okay? We have our range within these two blue lines. Yeah, I mean, this is literally the example I just drew you. We sweep the high right here, and we close within the range. The candle closes down here. Not down here, right here. Look at the next candle. So this is not going to make you a billion-dollar trader overnight because this isn't 100% accurate like every other confluence in trading. But you can clearly see this works, and you can go through all over the daily and find examples of this working. Look at this. And this works for both directions too, but I'm just finding good bearish examples right now. Look at that. Sweep, closes in the range, next candle, bearish. See if I can find a bullish example for you guys. Look at that. So we have a bearish range, sweep to the downside, next candle, bullish. And I've also seen this in my back testing that it can take like a day or two for it to really react off of it. So there might be like a great example of CRT, and then that third candle, doesn't exactly go within line with what I'm saying, but then the very next day it does. It's just something that I'm still practicing. Let's find one more good example for you guys. Perfect. Whoop. Sweep, close within, bearish. I mean, bro, it works. I've been using this every day alongside finding the trends. I'll always find trends first. Because they're just really accurate and it's smart to trade with the trend. Unless you get freaking manipulated, reverse fucking ass blasted, then it's not fun. Which happens a lot. So there you go. There's the first two, which I consider to be the most accurate way to find bias. I have a third example for whenever you see consolidation or if the trends are going in different directions. So it's very similar to candle range theory, but it's a little bit more on the lower time frame. And I call this, I don't really have a name for it. It's really similar to CRT, but I call it the 15-minute range close. The 15-minute range close. Now, what does that even mean? Well, I'm going to draw it out for you again. Or actually, I'm not going to draw this one out for you because I'm ass at drawing. And also feel free to write those down, take a picture, do what you got to do. So we're going to break it down. So say we're fucking going in opposite directions. 4 hours in the uptrend, 1 hour in the downtrend, vice versa. It doesn't matter. They're both consolidating. There is no trend. We're going to head to the 15-minute and wait for market to open. Here then, okay, I trade New York sessions. So 9:30 to 9:45 is going to be our first 15-minute candle. So let's see what happens here because I think it's a great example. This is our 15-minute range. A 15-minute candle opened. And this might be more accurate on market open. Actually, this isn't so bad here. This is a terrible day to do this. Yeah, let's use... Actually, this might work. Right here, the 9:30 candle. All right, so from 9:30 to 9:45 is your range. When that candle closes, you scale down to the 5-minute. Oh my gosh, it worked perfect. I mean, this was a terrible Friday, but it literally works here. So our 15 is from here up here. Okay, that's our 15-minute range. Why does it look like that? Wick to wick. Okay, sorry, you just got a zoomed in view of my forehead. So then you find a 5-minute close out of that range. This is a perfect example. This was a little bit okay. So at 10:10, a 5-minute or I'm sorry, at 10:05, we had a close, like a full candle close, not these wicks that are popping out. The 5-minute closed above this 15-minute range, and we were primarily bullish for the rest of the day. Had it closed down here, it was very likely would have been bearish. And now that I'm looking at this, I could have used this in this trade. I took a trade Friday. No, I didn't. I didn't take a trade Friday. But that would have helped me decide my bias, right? So here's another example for you guys. We have a 15-minute candle at 9:30. I've ranged it out. Scale down to the 5-minute. Boop, boop. There it is. All right. So as you can see, range was made here. It's from this candle. 1, 2, 3. That's our 15-minute candle. 5-minute close. Bullish for the day. Obviously, a little later in the day, but we never went below the range. Like every other confluence, this is not foolproof. Please keep that in mind. I am not a 100% trader here. These can totally be wrong. I know that sucks to hear, but it's the truth. But combine all three of them, and your probability of a winning trade is just going to be way higher. It's simple stuff. It really, really is. I hope that this video made sense. I just fucking deleted it. So with all that being said, keep in mind, these three confluences for finding your bias are not foolproof. Market will market when it wants. It'll move the way it wants. It's just how the game goes. But if you can use 2 or 3 of these in combination with the other confluences, your chances of winning are going to go way up. So I hope the video was of help to you guys. I really appreciate you guys for watching. I'll probably be able to trade a good bit next week. It's going to be raining, so I can't really work a ton. But yeah. Oh, and you know what? And for if you stuck around this long, you can see that I actually did trade a couple times this week. I'm down on the funded right now, but I took 2 trades this week. They just really weren't worth talking about. Um, obviously because I just didn't make that much, but we're coming back for this loss right here, man. Took one really bad loss, but I'm starting to really learn how to mitigate it and get a way better risk-reward ratio. Yeah, expect some banger trades coming towards you guys in the next couple weeks here. But with that being said, you guys have a good one, man. Deuces.